All right, so this is me yesterday um doing some back testing on uh BTCUSD, which is the crypto currency pair. So yesterday I was just trying to have a look as to does it throw in setups, what kind of setups and all that. So yesterday I saw something very interesting. You know, when I say um we need to wait for setups and all that. Now, something so beautiful that happened yesterday. And if you watched my videos that I posted, 3 videos that I posted yesterday, you would have realized that this is the same thing that I talk about over and over again all the time. So now look what happens right here. So this pair is actually, if you on a sell like level 3, if you count levels for it, you'll find that you are actually at a peak formation right here. So after having seen that this is a peak formation, there was a nice bounce on MBL that I picked up on this. And this bounce on MBL was actually this point right here. This is where it was. So it was coinciding with the Asian box right there. And it was a good point to actually take a sell from, and I took a sell from there and went all the way down until price came to this point where it actually bounced off, or rather did not break the low of this day. So these are things that you are back testing because you are looking at and you're saying, okay, this is what I see. And I wasn't doing this on a on a real account. I was doing this on a demo account. So now I'm saying, okay, we did not take the low there, and we did not close any candle below the low. Now, when I always say that this is not a coincidence, look at how they tried one and they tried for the second time there, and they never did. All right. Now that shows you that this market is so conditioned in such a way that everything will always happen the same way all the time. Okay. Now, after that, I then quickly moved to my 15 minutes time frame and what I saw from my 15 minutes time frame. Now, if you have watched the 3 videos again that I posted this weekend, you realize that when the 200 EMA is near crossing or touching the box. So if you have watched again the video about London patterns on your lectures, you'll find when the 200 EMA is touching or near the Asian box, usually that's where your setups are going to appear. So because I wanted to see this market buy its way back to the top and probably form a second leg there, this is exactly what happened. Now, look at how clean this is. A move outside the Asian box and give you the first leg and then give you the second leg and actually give you those pins on the first leg and the second leg right there. And it closed. I didn't even wait for the close at 30 EMA. Just after the close of this candle, that's when I took a buy from there. So I removed my sell because we couldn't break the low. My TP was way down below, and then I took a buy. So this is how I was tracking the pair. And I could tell that now anything outside the Asian box that is a proper setup, you should you should trade in that direction. So one, I saw that we could not break the low by this leg. Two, we are forming a setup on the 200 EMA. So I took a buy from there and I left the pair running, and this is where it is now. But my target is to see it go all the way up to either first TP that high or that high there. So either of those two highs, then we can expect a buy. Now, this being the end of the day, I foresee it closing the day here. Now, you already know what's going to happen the following day. The following day, you're going to see a stop and high of the day, and then the market will start to sell its way down. So that is what I then foresee on the following day. So you can actually see these things as they unfold when you pay attention to the liquid things that happen. But if, say, you took a sell here, all right, and then all of this starts to happen, there is still nothing wrong if you're holding long-term, say 4 hour and going upwards. You can still hold even if you see this happening because you know yours is a sell overall. But if you're an intraday trader, then you need to pay attention to these things. That is why I posted those videos yesterday to try and help those who trade on a daily basis, things to look out for. And I always say, only look for setups outside the Asian box. Anything within the Asian box should not interest you unless if it is JPY pairs. You only look for setups outside the Asian box. All right. Now, let's move on to today's lesson. Okay. So I'm going to bring the whiteboard again and hoping everyone is going to see it. All right, so if you can't see the whiteboard, please confirm on the chat page or just let me know by word of mouth. But if you can see it again, let me know by word of mouth that, yes, you can see it. Then we can move on.
Yes, we can see it.
Wonderful. Thank you. All right. So, guys, this is a new week, and I was looking at the market over the weekend, and I can tell you that I saw hundreds and thousands of peak formations. I saw a lot of peak formations. Markets, some are in level 3, some have already moved into level 1, some have already reset and they're approaching level 2, and all those kind of things. So I saw a lot of setups, but you should keep in your mind that having so many peak formations appearing in the market does not mean that the market will straight away and start selling and buying from those peak formations. Some of them will consolidate. Some of them will go that intended direction. Some of them will extend. Some of them will reset. So you need to be very careful what pair you are dealing with, etc., etc. So I'm just gonna briefly touch on how you scan the market, right? So first of all, you've got your USD pairs. I don't want to call them major pairs because if I do, it might confuse some of you. But in general, you've got USD pairs, right? So your USD pairs, you've got Euro. Let me try and type. You've got Euro, USD, and then you've got GBP USD, you've got AUDCAD, and maybe let's also mention NZD USD. All these are major pairs, and also USD JPY. All right. Now, amongst the other list, you've got the Euro JPYs, you've got the GBP JPYs, you've got the Euro NZD, you've got the GBP AUD, and you also have got exotic pairs like the USD MXN, and you've got the USD ZARs. And then you've got all the other pairs on the other side, the GBP, NZDs are the ones that will consolidate over and over again, the Euro GBP, etc., etc. I'm just giving you a class of these pairs. Now, the pairs that move the market are these ones. All right. These are the pairs that move the market. So if you are a clever person, all right, um, you can, if you have a broker that has got pairs like the DXY or the dollar index, the yen index, NZD index, or the USD index, you can take advantage of those pairs and actually analyze them. Then those pairs will tell you what the USD pairs are supposed to do. All right. I actually forgot to use the CHF. So if you look, for example, the US dollar index, right? If the US dollar index maybe formed a peak and is moving level 1 into level 2, right? It means USD CHF is supposed to do the same thing. That means USD CAD at some extent should also follow the same way. This is the dollar index. All right. This is USD CHF. This is USD CAD. All right. Now, the Euro USD should do the opposite. GBP USD should do the opposite. All right. All these are tools that you can actually use in the market. You should not be limited. That's why I always say to you, even if you've got your own strategy that you know and you've learned, use that strategy as a confluence. It's going to help you to get maximum returns out of the market. So these dollar index are actually futures. You find if you check on your broker, or if you go to a futures, you'll find sometimes it's termed DXY, sometimes it's termed is it DXS? Sometimes it's actually written dollar index, DI, and so forth. So you can actually check your dollar index and find out where it is going. This will determine what's going to happen on those other pairs. Now, the moment you know where EU and GU is going, now everything else in the market is going to be so easy for you to know where it will go. Even if, for instance, even if you see this as a buy for some reason, right? You see your dollar index is actually a buy, okay? And your EU is actually a sell, all right? And your NZD USD is a sell. Now that means this is supposed to buy because it will go in the opposite direction with NZD USD, right? You can actually use that. Now, again, another thing that you can use, I'm just going to pop the my web and try and show you guys, all right? Another thing that you can actually use, if you want, you can actually go to, let's take for instance, I'll just share this and I'll just open up a web. Okay. You go to Myfxbook. So I use Myfxbook very often because it helps me to kind of track my pairs and all that. So this is what you call Myfxbook, right? If you go to this website, Myfxbook, one, it's going to show you about the calendar, which is your economic calendar. For those who want to know about news, you can actually come here and remove the low impact. I always do that all the time if I'm not logged on. And then from there, I'm left with only the things that matter. All right. So you can actually see all the news for the week. You can also choose to see only what's for today. And as you can see, Euro pairs have got so many high news. So that means Euro pairs are going to be moving a lot today. So you can actually use that. You can go to this tab right here that says correlation. You've also got calculators, spreads, and all those kind of things. You can go to what we call correlation. Now, on correlation, you've got this big chart right here, all right? Now, this big chart, if you come to it here, you'll find on the column symbols, this is what you see. On the row symbols, this is what you see. So pretty much almost all the pairs that we trade. You can also put the pairs that you want. For example, let's just leave with these pairs here, maybe add NZD/USD instead. So you can only put 10. And then let's look for Euro NZD as well, so that we continue with what we're explaining. There is Euro NZD. So if you come up here, you'll find that Euro NZD against Euro USD, because they both have a euro on the other side, they correlate 76%. So these numbers, they change all the time, but they don't change like with big figures. So 76% is actually a good number. What I look at myself, I look at 75% going forward, right? That is what I focus on. Now, 76% is a big number. And when it has a negative 76, what it simply means is that if Euro USD is on an uptrend, then Euro NZD is on a downtrend. That's what it simply means, because that's the inverse proportion, that negative 76 there. So every time when you see a buy setup on Euro USD, you will have to see a sell setup on Euro NZD. This will save you from actually making a loss in the market by trying to buy both pairs when they are actually inversely correlated. Now, again, it does not always mean that the fact that there is a number, or maybe say 80% or whatever, the candles are going to be the same. That's not always the case, but this is what you would expect when you're trading, right? Now, if we go from Euro NZD and go to NZD USD, right? So we've got NZD USD here and Euro NZD. As you can see, Euro NZD, NZD USD, they actually correlate 93.3%, and that's a negative. So that even means there is no way in this planet you would buy NZD USD and also buy Euro NZD. The moment you do that, you need to be arrested. So it means the other pair will have to go the opposite direction. That's what it simply means. So if Euro NZD is falling, then NZD USD is supposed to be buying. So you can use that as a correlation. All right. This works well on currency pairs. On exotics, it doesn't really, because you'll find sometimes it will tell you USD MXN is 100% inversely correlated with USD JPY. Then you look at it and you're like, they don't even, relate. So I don't use it on exotic pairs. I only use it on currency pairs. Now, it will be so interesting to affect that sometimes you might find, maybe let's check one pair and I'll show you something. Look at this right here. You have Euro JPY actually correlating with EURCHF. That's really interesting because none of these pairs have got any like similar currencies with them. Like this is EURCHF, this is Euro JPY, but they actually go pretty much in the same direction. So every time you buy Euro JPY, then you're supposed to be buying EURCHF as well. Another wonderful example that I might show you as well. I'm trying to look at higher numbers. Let me try and find an inverse higher number. Maybe something like let's see. That's USD card and Euro MXN. Um, how about Euro USD? Okay, that's USD card, so there's still the same pairs. I'm trying to look for pairs that are so different. Then I'll try and show you what I'm talking about. This is a fairly big number as well. Not really big, but fairly big. Remember, card shift was actually good with Euro odd, but now it's actually the opposite as well with GBP chief. Let's try and see if we can find another one. GBP NZD, you can see how they are minus 73 with NZD USD. So because the number is not in the 90s, the reason is because of the GBP on the NZD. So that means sometimes there's gonna be those instances where you'll find GBP NZD actually buying together with NZD USD for a short period of time, all right? For a short period of time. Um, all right, I'm trying to see if I can find something which is actually different in terms of pairs, but we'll do the same thing. That's gonna be interesting. And USD JPY with Euro USD as well. Inversely correlated. So that means they'll definitely go different routes, but because it's a 70%, it might sometimes go the same way. So I usually remove these exotic pairs because they kind of confuse the way they move. It's not really that of a correlation. Look at that 83% there on gold and AUDCAD. That's also an interesting one as well. Gold and AUDCAD. And you'll find that AUDCAD usually moves together with uh USD pairs. So you'll find if AUDCAD is buying, then it means Euro USD is buying and AUD USD is also buying. So now that's why you see that 83.6% there. So that means if you're buying AUDCAD, then you should be looking for setups also on gold. If you're selling gold, then you should look for setups on AUDCAD. And again, it's actually higher than Euro USD and gold itself, which is really quite interesting. And have you also seen that gold and GBP USD have a more better correlation than Euro USD itself? So these numbers change, and it's actually quite good, and it will explain the reasons why sometimes you actually see the market acting in a certain way. Look at Euro NZD. Euro NZD is actually minus 81.9%. Now, that means if you are buying NZD USD and you are also buying gold, then you should be seen selling Euro NZD hard. You should be selling Euro NZD hard because it's gonna be the opposite. So this is what I wanted to show you guys. Some of these tools that you can actually use. And Myfxbook is very good. You can actually open an account here. It will help you even to connect your Forex trading accounts, track your accounts, and all those kind of things. It's actually very good. Utilize these things. It will help you. I always have it open when I'm trading, especially for economic calendar to know what's going on during the week. So please utilize this. So that's what I wanted to share with you to try and show you that you see the correlation of pairs. If only we had time, I could have shown you even on the charts where the market actually, where we see the charts, they look very similar. I could have shown you that the charts where they actually look very, very similar to show you that the correlation actually works. But I want us to get straight into analysis, so we're not going to waste time doing that. All right. So we're gonna get into analysis, and again, you know the drill. So we'll start with uh probably on the two or two or three pairs at least. And then if we find time, we can then maybe jump on volatilities and try and see if we can do maybe one pair but we want to focus mostly on currencies because that's the market that is opening now. And yeah, so again, I'm not the one who presents. You're the one who presents. So you guys tell me, what do you want us to discuss? So give me a pair, and if you give me a pair, you're the one who's gonna explain that pair. All right. So Ricky is saying AUDCAD. Let me try and look for AUDCAD. All right. Okay, there you go, Ricky.
Okay. For AutoCAD, I'll be looking for a sale. This. If you go to your daily, let me see the daily or
The
D1.
daily. Okay. Mm-hmm. Let me
All right.
try
So
and let me try and put a clean template. All right, yep.
so on D1, looks like we have a reset at the 200 here going up. So it's level one. Go to your 4 hour.
4 hour.
Oops. So on the 4 hour, I was looking at it coming to the third level. How I looked at the levels, 1, 2, 3, cut it off. Because I know this was a reset from last week that I watched here. Well, okay, go to your 1 hour. I'm sorry. I just put it
1 hour.
on.
Okay.
So from the 1 hour, um, this was the this was the third level here. This was the third level. I looked at this as a reset. So it's going up 1, 2, and then 3, and then it'll come down. But I'm thinking that the AUDCAD is on the third level. So I'll be looking for probably a midweek reversal if it shows up for sale.
Okay, yes. Um, all right. That's very good. Let's go to the monthly time frame. So top-down analysis, monthly time frame. As you can see, we have a nice buy there. I mean, this is the end of September. So we are starting October tomorrow. Is it tomorrow or day after tomorrow?
Day after.
Yes. So we are pretty much almost there. We are left with one day, which is today. So whatever is going to happen, pretty much most of the candles will close as they are. So this one will definitely close as bullish. And so that means the next candle that will come most definitely should also be bullish at the end of the month, or it should start bearish. That is, you know what candles do. They will start by, you know, testing the high of that candle and then go down maybe say 50% of that and then go up. So you have a long week, something like this. Or it can actually close bearish, but something of that sort. That's what you're expecting to see for the month of October, all right? But everything we can see here is actually bullish. Now, if we go to the weekly time frame, same thing again. It is also bullish. There is really nothing to analyze here. If you remember correctly, I don't know if you remember, we once analyzed this pair and I said to you, I want to trade AUDCAD, and I said we are retesting the neck. I don't know if you guys can remember this. And I could not trade it because of this. That's the reason why I let it go. Because there was a very long candle that came out in the morning during Asian session and it went all the way down up to there. And then after that, that candle pulled back the very same day and went back, and they managed to close the week, something like that. And that's the reason why I could not take the pair, because they were trying to clear stops right here. And also for those who trade other strategies, they were also testing an order block there. All right. So that's the reason why I couldn't take this pair. Now, after having done that, the pair left and I could not take this. And it came back down. And when it came back down, I actually had a different pair running in the account. And so it left me. So that was a little bit, disappointing. But then again, you trade what you have at that particular moment. So I couldn't just add pay straight away there. Now, if you're looking at a structure like this one, this should tell you you've got probably a peak there. You've got a peak there. You maybe have a peak there. You might have a peak there too. And maybe you're expecting another peak there, is what Ricky said. So all these areas where the market turned, there are peak formations there in all those areas. But you can see the similarity of how the market is printing higher lows. The market is printing higher lows, all right? So remember what I said, when we are going up, don't worry about what's happening at the top too much. You worry about your higher lows. As long as your higher lows don't get broken, then it means you're on the safe side. So as you can see, no higher low is being broken. This is a weekly time frame, and the market keeps on going up. So you're not concerned whether here they had to dip down and then go up. As long as your higher lows are not getting broken, then you continue being bullish. It's only a time where it then decides to sell like this. It decides to sell like that, and then it closes here. Then that's when you can tell that, okay, we've broken the law. Now that's a shift in the market, and the market is now bearish. All right. So at the moment, even if you see a peak formation for a sell on a smaller time frame, take the sell at the back of your mind, knowing that this is a bullish market. This is one thing that you need to keep at the back of your mind. Your monthly time frame, your weekly time frame, they are all bullish. There are no signs of bearish yet. So when you take sell positions, take them knowing that the market is what? Is bullish. All right. If you go to the D1 time frame, same thing again. There is nothing that shows us that the market is bearish. Everything looks bullish. So again, when you take those level 3s on smaller time frames, take them knowing we are bullish. Now let's look at the 4-hour time frame. So what we said on the 4-hour time frame. So we've seen the market is back here at the 50, and that's actually a reset on 1-hour time frame. So that's a reset on H1. So this being a reset on H1, then we have seen the first push and we have seen the second push. So we expect the third push, exactly what you said, Ricky. So we want to see the third push and then see a peak formation. So now the next question will be, okay, if I want to buy this pair, where do I buy it today? All right, let's go to the 1-hour time frame. Now I'm going to put a template with agent boxes to try and explain this point. So you want to buy this pair, all right? And your next question is, where do I buy? Now, because we're expecting the third push, there is a high chance that the market might not come to the 200 EMA. I'm not saying it will not come. Ideally, what you're looking for is this in the buy. But because the market has pushed one and gave you a 50 setup and pushed again, so there's a high chance what they'll do, they will give you a 50 setup still and continue going up. So if you were to expect a setup, the areas you would expect a setup here are, number one, the 200 EMA. Number two, the previous higher high. The previous higher high. As you can see, it's still also coming to the 200 EMA. So that means this is a very strong area where you would expect a setup. So it means you then wait for a stop hand. Let's take, for instance, here is our box here. I'm going to have to teach this often so people can understand. So this is what you need, right? You want the market to stop hand low and give you a setup there and then move up. If for some reason the market does not stop hand, or rather maintains the 50 and go up, or just shoots high and go up, then do not take the trade. It simply means the setup is not yours. Do not take the trade because you're supposed to take the trade when it was here. So the fact that you did not take it when it was here, you're supposed to wait for it to come around the 200 EMA. And please go and watch the videos that I posted on YouTube, the last 3 videos. Watch them in their order so you can understand why I'm saying all those things. But that is where you expect your setup to come from. A shoot to the downside and right here, then expect a setup. So if we see the market do that, then that would be happy days. We'll be very happy. But if it doesn't do that, then there's no share for us. We need to let the market go. But ideally, we want to see a buy and then level 3, and then we can sell. All right. Let's move on to the next pair. Simba said EURCHF. Okay. Now, before we move on to the second pair, when I look at my 4-hour time frame again, you know, I love to trade the 4-hour time frame. So when I look at my 4-hour time frame, there is nothing really special that I'll see here other than just a dip and a continuation to the upside. So that's all that we can see on this pair right here. So you're not gonna see the only low of the week that you see is today's stop hand. So if today actually stop hands to the 200 EMA, that would be a very good thing because that will show us the low of the week at that particular moment. Then the market will go up from level 3, whether it solves lower than the low of the week, but at least we would have seen the previous low of the week, then the low of the high of the week. All right. And then from there, we trade away from the high of the week. Once this low gets broken, then it means the new low of the week will be the one here. All right. But whatever is going to be printed today for a buy, that will be the low of the week. Okay. I hope this makes sense. EURCHF. Let's see, EURCHF. Right, there we go.
Coach, how are you?
How are you? I'm good, man. How are you?
It's been long.
It's been very long. Where do you want to start?
Let's hit just a minute. Let me see. Let's start with the H4.
Okay, the
I
H4.
think we
All
can
right.
start with the H4.
All right.
So from this one, I hope everyone is following. So this is a peak on H4 peak. This one is a peak reset on H4 on 200. Can I mark the chart, coach?
You should be able to mark the chart. I think everyone has got the annotation.
So this is a
Yes.
peak on H4 peak reset. Then we have the level 1 drop. Then we have the level 2 drop into next to the second week. Then we have the level 3 drop. Then we have the peak. So then we had the first push up, which was now level 1 rise. You can confirm that by the cross of the 50 and the 200 there. Then we have a nice bounce on which was a reset on H1. This is an ID50 on H4 to give us a second push to the upside. Then it gave us another reset at the 200 EMA. Then it dropped. So if we can go to H1 now, coach, with this, let me see where we are on H1. So can I erase this? Okay, can I erase this? Yeah. So this was the peak reset. We can agree that we saw on H4. Then we pushed is. Then this is the level 1 drop that I saw. So what I'm expecting the market to do as it's opening now, I want it possibly to give us possibly a low of the day and push possibly 2 levels to come somewhere around this area. Then you drop into level 2. Then thereafter we drop into level 3. So this is my prediction, coach. Now I need you to help me through this one.
All right. Very good. And again, guys, if you analyze these pairs, you should trade them. I'll advise you that if you analyze a pair, please watch it through the week and you should be able to trade it. Don't analyze a pair and then just put it by the side. Whether you trade it on a demo or on a real account, you should be able to put in a position. It doesn't matter, demo account, to show you that, okay, my prediction was actually right. That is the only way you can tell that you've mastered what you're analyzing. Practice, put in those positions on a demo account, let them run. It doesn't matter. Even if you are not making money on the demo, you are doing practice. So put in those positions, let them run. Then you can see that, oh, yes, I did a very good analysis. All right. Now, looking at this pair from the monthly time frame again, there is nothing really different here. I am hoping that the market will continue selling today so that this closes bearish, because if this closes as it is right now, then guaranteed the next candle will start by going up all the way maybe up to there before it goes down. So that'll be a little bit of a change in structure. So we want today to really sell very good, even if it doesn't sell too much, but it needs to close that green part there and make it look a little bit bearish. What I'm trying to say is a situation like this one right here, where you've got a bearish candle and then you close this one as a pin, the next candle will definitely be a buy first before it becomes a sell. All right, so you wanna have that pin there closing as a little bit of a red. Not that this happens all the time, but this happens most of the time. Every time when you have a pin or you have something like this, you know that if this closes like that, then the next candle will come in as a bullish candle. All right. So that's what we are trying to avoid. But again, we're not saying this is a buy. This is a bearish market. It doesn't change that. Okay. Now, if we move to the weekly time frame, it actually gets interesting. You know, these are the things that you guys are supposed to look for, search for in the markets and actually show us. Okay. Now, look at this. You've got a very nice peak formation right there. All right. A very nice peak formation from that time frame there. Now, look at where the market came to. Look at that. The market actually came to the neck of that M. All right. The market came to the neck of that M. They actually tested that M. And that shows you how the market respects these concepts. So if they are coming to test there, then it means all you need to do is to put a sell and just sit there and wait for months and months, all right? If you are a swing trader. Now, on the weekly time frame, this is a very strong sell. The reason is because they have closed this as a railroad, all right? They've closed this as a railroad. So it means the next candle to follow will buy short and sell more. All right. We'll buy short and sell more. So that is what you are actually expecting. So we're expecting this week's candle to actually be bearish. So you can see this one when it opened. This is actually a funny pattern here, because the open of this candle is here, the close, the high is there, and the low is there. This candle was supposed to start here and go all the way down, but because of market gap, it started all the way there. This is really criminal from from the brokers and the market makers. It's so criminal. They had to start all the way there. It's like they literally reversed this week's move just by opening the market at the wrong place. So they did that and they swept the high of that candle and then they started to sell. So that's really interesting. But yeah, we are expecting this to go down since we opened at the right spot this week. So these are the effects of the market opening at wrong places. Can you see that? You actually have gaps in the market there. You actually have those gaps, and the market needs to fill those gaps every time. So those are some of the things that you need to look at when you're actually trading. All right. So those gaps right there, you can see they are being filled out because the market can't leave them as gaps like that. It has to fill them out because these are inconsistencies. So see that the market ends up filling them out. So you can actually tell what's going to happen when the market opens. So you can see all those wicks there. They are trying to fill those gaps out. So it is not a coincidence. They are literally opening at the wrong area and then they come back and fill those gaps. Now, the good thing about this one is they opened at the right spot. So the only buy they will do is just to close that small gap. So you can see there's a very small gap right there, a very small gap right there, which they are going to close by pushing up, give you a setup, and then start to sell for the rest of the week. So moving on to D1. Let's see what D1 actually has for us. But this is very important when you are analyzing, guys. Look at the weekly time frame. See where the market actually opened, and then you can actually gauge what the market is gonna do. All right, so this is our daily time frame, and from our daily time frame, you can see that peak formation there, the one that we saw on the weekly. Now it's different because the weekly one, this was the second leg, but this one right here, this is now the peak formation, and this is your ID50. All right, this is your ID50, and the market did break that structure there to show a more bearish momentum. And remember what I said, every time when we are going down and we are breaking those lows, that shows high momentum of the market. So as you can see, the market broke there, pulled back into this range, and then formed an ID50 and pulled away, broke that structure, pulled back into the range, and then it recalibrated, and now it is pulling away. So our expectation with this pair, right, is that the market is supposed to push all the way below this low. That is the expectation, that we need to pull below this low. And if we do that, then that means we even have more sell momentum. We have more sell momentum. But at this particular point, our targets are here and here. Those are our targets. You can see ADR low for today is actually there where I put the line, but that is our target there and there for maybe the next 2 days. That is where we expect the market to hit. Maybe for the week, that is where we expect the market to actually hit, or even below that. So it'll be good if it closes below that. Okay, so that is the expectation. Everything is a sell here. There's nothing that proves otherwise. Now we go to H4. Now H4 gets really interesting, which is really good. It also shows you a peak formation again. You've already counted levels, so I'm not going to count them. But this is your nice peak formation right there with the first leg, a W in the middle, and the M on the second leg. So you've got two M's, you've got something like that, all right? So if you look at this from the D1, you'll find it's like this. Again, for those who are new, you learn this from the charts, from the videos. But that is what I'm talking about there, having M's and W's being V's on higher timeframes, all right? Now, if on 4 hour, nothing again that we see. So where do we expect our setup to form? All right. Now, first thing that we see on the 4 hour, we've already broken structure there, all right? Or structures, okay? So by breaking these laws, it simply means the market is showing more sell momentum. But before the market continues selling that momentum, the market has to retrace back into the range, all right? It has to retrace back into the range and then from there sell. So what kind of setup are you waiting for? You're waiting for an ID50 kind of setup. So if you see this ID50, please sell it very hard, okay? So you're expecting a sell on the ID50. Now, it is not a coincidence that the market has came to this point and stopped there. It's not a coincidence. For those who do resistance and support and all that, you can actually see this is an area of support that was once a resistance. Okay, so the market is bouncing off that area there, and we are looking to see if we will have a setup in that area there. Okay, and again, we do not trade without a setup, so we don't enter blindly. We wait for the market to pull back. So if we go to the 15 minutes time frame, I'll load that template again. We want to see where exactly we would anticipate where the market will happen. All right. So 1 hour, nothing really important with the 1 hour. Everything is just the same. You've got a golden cross right there. That's signifying a very long term move. Now, moving to the 15 minutes time frame, I can see that from the 15 minutes time frame, the only pushes that we have had this one. So these are just random sell pushes, the market pushing down on different days. All right. So these are random pushes. Okay. So the market is actually issued us with a low and a low and a low. I'm focusing on this low and not that one because this is on the buy side. So I'm looking on the sell side as soon as we got the setup on the sell side. So this was the last low for the day. Then they printed another new low there and another new low there. So what you are looking for here, because you already have the 200, 800 crossover, it simply means you are now at level 3, all right? So according to those laws, you are now at level 3. These are 15 minutes levels, so don't confuse them with 1 hour levels. So what you're looking for is the market to form a W, all right? This can be inside the Asian, this can be outside the Asian, and then buy its way up to that area there, and then give you a setup either today or tomorrow, and then start to sell. So that becomes the high of the week. So that means you cannot be in the business of buying this pair. Do not buy it at all. Even if you are tempted to, just let it go and wait for the sell setup. Unless if you've got enough funds for you to catch the buy, then I won't stop you. But if you don't have enough funds, don't buy. Wait for it to go up there, give you a sell, and then go down. Okay, so that is what you are actually expecting. So that is it, guys. Let's look on another pair. What's the next pair?
Thank
Yes.
you, coach.
No
Thank
worries.
you, coach. I will you know what will happen. I will show you.
All right, no worries. No worries. Ricky, you are saying TY. What is TY?
Well, I just was saying thank you. So, thank you, Coach.
You're saying? Oh,
Uh,
thank you. Okay. All right, no worries. No worries. What's the other pay that you guys want us to do? Joke, if you type slowly, you eat late.
Uh,
Okay?
we can do volatilities. I want to see V25.
All right, just a second. Let's do Jock's pay because I know she if we don't do AUDCAD, she will beat me. All right. Um
You, I don't have a kid.
so yeah, we need to do AUDCAD because she really loves AUDCAD. And then another one again. Um before we go to AUDCAD, this is something very interesting as well. On gold. I was actually looking at it over the weekend, and my expectation again, I know there's some people who love gold. I need to see a setup right here on the 200 and a drop. So this is what I'm expecting today on gold. Let's see how the market unfolds. But yeah, I'm expecting to see an IT50 there. And so if the market does give me a setup, which I see the 200 EMA, it's already moving right there. So I believe the Asian box will be somewhere there as well. Remember what I said, when the Asian box is touching, that means your setup will also be right there on the Asian box. So you expect your sell at that particular point. So expect a setup on gold as well. So we'll see how it actually unfolds, but that is what I am expecting. All right. I don't know what I just did to my Windows. Okay. So that is what you are expecting. JPY pairs, you have all seen what JPY pairs have done. If you look at them, they actually had a hard sell on Friday. And that is very good as well because it shows you a shift in the market. If you look at it from the W1 time frame, you can see right there, they've always been on a sell, which is really good. So that shows they will continue with the sell. And so what you're looking for on 4 hour, you're looking for the market to actually retrace because you've seen the market has already broken this. So that is now a reset on the 4 hour. So pay attention to JPY pairs as well because they will give you nice setups. So they've already broken structure there. And so what you're looking for is for the market to retrace back into that area and start to sell. Now, if you move to the 15 minutes time frame, 15 minutes time frame, the only push that we have seen so far on that particular day is only that one. So there is also a possibility that the market will sell so that they cross over these before the market starts to come back to that range. So that is also a possibility, something to expect. So again, if you see them selling today, do not be surprised. It is just a sell to try and finish the M15 pushes. And as soon as that is done, then they will come back into the range and give us a good setup because they've already broken multiple structures when they were going down. So that on its own has shown us a shift in the market and the market being bearish. So remember what I said when I told you that JPY pairs, they're going to be selling, they're going to be buying for the rest of the month. And that's exactly what they did. They bought for the rest of the month. I remember telling everybody to catch these buys when it was in big formations. So you could have benefited from all this. Now it is time for them to turn around and start giving us sell setups. So, and again, this being the beginning of the month, whatever high that is going to be formed at this particular week, it's going to be the high of the month. And I do not see them coming back to this area again. I just see them continuing going down for the rest of the month. All right. This is my prediction. So if you're going to be trading JPY pairs, please watch out because you don't want to miss this kind of opportunity.
Hey, Coach.
Yes.
Coach, I have a question. Again, I think you probably answered it before, but how do you anticipate once in a position where it's going to go? Like because you just said that before you told us the J pairs will buy for the month. Like how did you anticipate that it would buy that long, or that it would?
So it's very simple, right? Let's put it this way. That's a very interesting question. Okay. So if you remember very well, when I posted one of my videos when I was counting levels on JPY pairs, this was USD JPY, and I was showing people how I was on a sell, this sell right here, all the way down. That's number one. Number two, we are in the middle of the month, all right? And this is 16 September, okay? So we're in the middle of the month. Now, on your left-hand side, if you check the higher time frames, you will find this is the low of the year. So there has been a time where price came to that same price there before. I can quickly show you if you want, right there. All right. So price has been in that same spot before, right there. So it has been in that same spot before, and it broke that spot on a daily time frame. It actually broke it. So that shows that now the market has formed a new low of the year. All right. So, and I said you are seeing a peak formation, and that peak formation is the low of the year, and you are in mid-month, and you have a reversal. So what do you expect the reversal to do? So you expect the reversal to actually go up. Now, how long is it going to go up will be dependent on this. So remember what I said. If the market is on a downtrend, right, it will issue you long-term cycles. And then when it's supposed to retrace or recalibrate, it will issue you short cycles, okay? And then issue you long ones. And then issue you short ones. And then issue you long ones. What it's doing is forming higher highs and higher lows at the same time doing that. So as you can see right there, this is your higher high. Sorry, your lower high. Sorry, your lower high. I always confuse these terms. And this one is your lower high. All right. So that means this being our lower low, now we need to have more momentum to break that lower low. Already this move has shown us that we've pushed halfway the cycle that happened during mid-month. So the fact that this setup appeared mid-month, this peak appeared mid-month, that was an indication for me that we have formed a peak mid-month, and we have done two cycles going downwards because there's another cycle here, which is a sell, and this one is another one, which is a sell as well. So we are now supposed to push back into the range. So I was expecting the market to actually buy for the rest of the month back into the range. For the rest of the month, back into the range. So that's a key level for me, being a peak formation in that area. Now, this one as well, it is a key level for me, being a reset or a peak formation in that area because, number one, it is a lower high. All right. It is a lower high to that one. Okay. So this being a lower high, we have broken structure before, which is the low of the year. So what am I expecting? I'm expecting to break this new low of the year because the market is already bearish. So I'm expecting us to go further down. Now, if we go to the monthly time frame, this is how the monthly time frame looks like. All right, this is how the monthly time frame looks like. Now, if for some reason the new candle breaks and closes below this low, then it means JPY pairs are going to be long-term selling pairs all the way up to there. So it means you have to sell them for the rest of the year if that happens. Can you see how I'm actually predicting it? So if we break that low there and close the candle below it, then any moment when the market then retraces back into this range, all right, it means when it gives you a sell setups or a peak formation of a sell, maybe on the 4-hour, sell it for the rest of the year. It's not going to come back. It will sell for the rest of the year. I don't know if I have answered your question.
Yeah, it kind of. So the reason that you knew that it was sell for the rest of the month because we were all it gave you a peak and we were already in the middle of the month.
Yes,
so
we were mid-month.
So in order for it to go back into the range,
yes,
it would take some time for that to happen.
Yes, it will take some time for that to happen. So while that is happening, I'm also watching. So this is actually good on the D1. It actually shows it on the D1. So you can see there, that's your low of the year right there. And the market broke that low. Remember what I said, the market moves this way. All right. So each time the market breaks a low, it goes back into the range. It's only that this is not a clear diagram. I didn't draw a clear thing, all right? Now, peak formation, you break the low, you go back into the range. You break the low, you go back into the range like this. You get the point? So that's how your higher time frames, they move. They break the low, they go back into the range. So every time a low is broken, back into the range. So that's what happens. So because they broke the low of the year, and they formed a peak formation here. So now they were supposed to go back into the range to close for that month. That's all they needed to do, to close for that month. But again, also having in mind that they should not break that high. They should not break, because the moment they break that high, then it becomes bullish. It becomes a bullish market. All right. So they should not break that high. They should maintain it. They can't close above it. These are your highs right there, the ones that I was talking about. So they should not break those highs. So that's the reason why they came back into the range. Now we're expecting them to break that low again, come back into the range and do the very same thing over and over again. Sorry about that. So that's what you are actually expecting on JPY pairs. Okay, so that's a very nice reset there, guys. And don't miss it, especially when it comes back for this particular week, because they've already done half of last 2 weeks. So that means for them to finish off and break this low, it won't take them that much. It will take them a very short time. Now, I don't want us to waste time. AUDCAD, this is similar to AUDCAD, if I'm being honest, because it's done the same thing as well. It's formed a peak here, Jock. So what you are expecting is you want to see the market push for the third time, and then form a peak there, and then it can fall. And that push shouldn't really be that too long or whatever, but that push is coming, so you should see it. If you go to the 15 minutes time frame, you'll find on the 15 minutes time frame, after pushing 3 pushes, right, they actually came back to the 200 EMA. So they formed the high of the day, came back to the 200 EMA, gave you a setup there and pushed away. All right. So what you are expecting today, because your Asian box is close to the 200 EMA, if you are lucky enough, you should see that stop hand to the low there. And if you see it, please buy it. Don't sell it. Just buy it to the upside. Otherwise, I do not see this as a sell. So buy it to the upside and maybe target that high there, which obviously should soon be broken. And then the market form the peak formation, then we can go down. So that is what you are expecting. Remember, last time when we were selling other pairs and AUDCAD kept on buying. So that is the same thing that you are going to see as well again. AUDCAD needs to buy one last time before it can go down. So it needs to hit that ADR high there. So that is what I am expecting on it. All right. Another pair that I have. So I've got a running pair on USD MXN. So what I'm expecting on this one, I'm still expecting buy momentum. So I want to see what's going to happen there. And again, it issued nice setups. I remember I showed you this on the videos. So my position is sitting right there. That is where my position is. So I want to see them break that high. I know they closed below that high for a reason. So I want to see them break above that high and push further up, because I still need to see the last push going up. Then we can start to talk about reversals. So today it might be just a straightaway trade rather than the market coming back to the 200 EMA. All right. So that is all, guys. I hope this is very clear. So I will try and give you guys volatilities. So I don't know if you can see my page on volatilities or not yet. Sorry, what volatility do you want us to do? Whoever is a pair.
Okay, V25.
All right, hold on. V25. Okay. Okay. So V25.
Yes, so you can go to H1.
H1. All right. Okay, H1. Here it is.
Okay. So what I discovered is this is a peak. This is a peak. Then we had the first drop. Then we had the second drop. Then we had the third drop. Then we had a peak there. So what was confusing me now is like it pushed one. So I wanted to verify, can I confirm this a reset, because it did not break this last high right there above there. And it's like giving sell setups now. Like now you see it's this low is taken out, so and it has already pulled down, give something like it's an ID50 and it's like preparing now to drop. But so can we validate this kind of reset? Because if I heard well, we need at least 1.5. I was expecting maybe possibly it was going to give another one. Possibly it had resetted somewhere here. I'll be okay with that.
Okay. Let's have a look and see what's going on. All right, so From our weekly time frame, all we can see is this is a sell. You can see for yourself, the market is actually on a sell, so it's supposed to be selling. Looking at D1, again, the market is also selling. However, the market is ranging. So you can see for yourself, the market is actually ranging. So it has been forming peak formations all through and not going anywhere. So that is more or less a dangerous point or an accumulation point as far as D1 is concerned. So you might want to be careful when you trade it. Just overlook to your D1 and see what your D1 is actually doing, because that is what will determine what's going to happen. All right. And again, on your monthly time frame, you are at a nice spot, so which is good because you are right here and you are anticipating that the market has to go down. All right, so that's a good thing. So you want to break that low there. So you are at a neck of an M, so that's a confirmation that it's an ID50 on the monthly time frame and you're supposed to be on a sell. So now that's good. So it's good to look at higher time frames as well, just to see like overall what exactly are they doing. So that's a very good thing, being on an ID50. Now on the weekly, that's a sell. On the daily, it's not clear. The reason why I'm saying it's not clear is because at the bottom you've got that there, so which I do not know why the market put that there, but because it's a ranging market, so it will keep on throwing those there. So that means if you are gonna sell, then your target should be right here or right there. So you do not expect anything lower than that. Okay. Now looking at the 4-hour time frame, the 4-hour time frame is a little bit suspicious to me, in as much as this looks like a reset on the H1. I do not like how the market is actually bouncing on MBL there. So I would stay away. This is not a confirmed reset. So it's not a clear reset until price moves away from this point. So I would say don't trade this one, because there is a possibility the market might come here and do that and go up and then give you a proper reset before it comes back down. So I'll say don't trade this one. Or if you trade it, then your target should be here around these lows. That is where your target is supposed to be. If you are going to sell it, you can only sell it down to those targets there. And then after that, move away and wait to see what's going to happen next. So that's all that I can give you on this one. It's a ranging market. So a ranging market is a little bit tricky. So you need to be very careful with it until it breaks out. But we know on higher time frames, it is a sell. But again, we don't know how long it's going to sell, because it can even decide, since it has finished 3 levels there, it can even decide to give you 1 and give you 2 and give you 3 and then come back down again, respecting that high there. So you want to be very careful with that. Okay. I hope that makes sense.
Yes, I'm following. I think the best is for me to leave V25 alone.
Yeah, just leave
I
it
have
for
a
now.
grudge with
Yes.
this one.
Yeah, leave
I
it
have
for
a
now.
grudge with this one. So when I saw that one now, that reset on 200, I know it has violated what you have said. But because it has to be at least give us 1.5 levels or 2 clear good levels before we. So, but I have a grudge with this.
Sorry about that.
I have a grudge with this one. But if it's not much trouble, I would want to maybe my last one would be V10.
Okay.
I did not look much on it, but I think there is something, but I know that VTN is your pair also. You already know something, so
Let's
you
see.
can help me. I know you might have passed through it.
V10. Where is it? Oh, there it is. All right. Oh, this is a very nice one. This is a very nice one, and it's actually showing a good sell there at the top. But look at, the things that I always talk about. These are very important, guys. Look at how market makers are very clever, okay? Now, see that low there? They made sure that no candle closes below it. And same applies with this one as well. I can put a straight line to show you. You'll see that no candle closes below that low. They are very clever on that. See that? No candle closed below that low. So they only swiped below it, but they made sure no candle closes below it. So such kind of trades, I do not trade myself until I see a candle that breaks out. So if this current candle closes below those two lows, if it closes below, then I'll regard this as a very good long-term sell. I'll wait for it to trade back into the range and then take sell positions from there. So you want to be very careful, especially if you took a sell from there, then yeah, it's okay. There's no problem with that. But if you see the market like this and you want to take a position, you should make sure that they have broken the law, and that's the best way you can then validate that the peak formation is actually valid, because as long as they respect the law, there is still room for them to buy back up, just like what they did here. There's nothing that stops them from doing it for the fourth time. They can do it for the fourth time and do it for the fifth time. All right. That is what we call a ranging market. So they can do it so many times as long as there is no candle that closes below that low. So it is not a coincidence. They are doing that on purpose. So you need to see a candle close below. Then that's when you say, okay, yeah, this is what's happening. And for those who do resistance and support, you can see for yourself, they're actually reacting to the last known high right there. They're actually reacting to the last known high. So that means you could have taken a buy there. You could have taken a buy there. All right. And if you go to H1 and you find a buy setup here, you are better off taking a buy than taking a sell. I'm not saying trade against the market. I'm just saying you're better off taking a buy than a sell, because they still do not want to close below. So if they don't close below this candle, if they close it above, then it means a buy setup is better than selling. All right. I hope this makes sense, guys, because this works on all pairs, peak formations, and all that. If you want to validate your peak formations, because the dealer does it all the time. So as you can see here on the 15 minutes time frame, there's not really much that you can see, but already on your TDI, it's something that looks like it wants to bounce on the MBL. But for us to be sure that this is actually indeed a bounce on the MBL, then we monitor that 4-hour candle. If that 4-hour candle does not close below, it doesn't matter that the 15 minutes candles did close below. It doesn't. What we want to see is the 4-hour, because that is where the break of the structure is. So if the 4-hour does close below, then we can say, oh yes, now we are expecting what? A push to the downside. So you need to be careful about that. But if you catch the highs for a sell, then you are better off. No worries with that, as long as you catch the highs. But if you do not catch them and you see it like this, then wait for it to come out. Then wait for it to retrace back, and then you can take it from there. Okay. So you want to trade smart, so you need to be very careful with what price does. Okay.
Yeah,
Yep.
Now for me, I did not like these two candles. These
These
two,
ones, yes.
two, they did not give you the normal. You see, the momentum is too much.
Yeah, it's too much. Yeah, that's a shift.
It's,
So there's a
yes.
high chance the market will retrace back to those.
Yes, but if the shift had now closed, I actually exited at this level.
Okay.
Because I took it last night.
Okay,
Then
okay.
it went and tried to retest this one. Then it then dropped.
Yeah,
I just knew I just put it too far. When I saw this candle, I knew it was going to retest this. So I just put my stops above a little bit far. Then when I woke up, it was dropping like somewhere here.
Yeah, this is too fake. The drop is just
Yeah,
it's
so
just
it
too
didn't give
much.
me the confidence to hold the sell. Yeah, it did not give me the
Yeah,
confidence
it's
to hold
just
the
too
sell.
much.
I just felt like the market, at least it's supposed to push back and correct this whole thing.
Yeah, yeah,
Then
yeah.
if it's going to drop, then it will drop properly. So I was not sure now about this. Would it continue to drop? If it continues to drop, then I'm out. I took what I can, then I'm out. But if it can retrace, give us something that is now, I want to see a clear retracement, then a good setup, then we can talk again. I just wanted to confirm this one was confusing me. This part.
No.
Hello,
Nah.
sir.
Hello.
You posted the B75, but it's like the trade went to south. I don't know because
Which
we
one?
can B75. I think
B75.
we, the level counted on H1 is a perfect level, but yesterday and today
Ah,
is what I
this one.
saw. Yes, sir.
Ah, all right. Yes, so this one, my idea was that it was supposed to retest there, all right, which it did, and I expected that the market has to give us a setup and a buy. But unfortunately, it did not. It actually gave us a reset instead. So you do not expect to buy from there. What you want to see is the market start to push down 3 more levels down. Now, if you look at it from the higher time frame, this is how it looks like. So from the higher time frame, it is actually a sell, a very good sell. But the reason why I posted this is because I was replying to someone who was buying this move. So they had asked if the buy is okay, and I said, yeah, the buy is okay, but the market will react there, and then the market will come back down. So that means when it gets to this point, you now need to check if it is going to give you a setup before it goes up. So this was not a setup; it was just a response to a person who had asked about the V75. So my expectation was that if we're gonna continue buying, we need to react at that point, and then push back down, and then give a new setup, which will then propel us to go all the way to the 800. But yeah. According to higher time frames, this is just a sell.
Okay, sir.
So yes, even if I don't know if there's another one as well that someone hit. That was V50, I think. Yeah, I think that was V50. This one right here. Again, it's the same thing as well. It's still a peak formation. And again, I said, if this is gonna buy, I'm expecting the market to react at that point there. So that will be the target. If the market gets there, that should be the target. Then the market will have to come down. When it comes down, then you need to look for new setups for it to buy. So it's not a case that when the market goes up, it will just come back down, bounce there, and then continue buying. Not really. When it comes back down, you then need to look for a new setup altogether there. Now, if you look at it from higher time frames, this one is actually a good buy because you already have a crossover. The reason why I said it will come down, it was because I was concerned about this 800, which had not crossed over at that particular point. That's what I was concerned about. So I wanted to see us push back further down and have that crossover, which it has now. But still, I still need to see this happen. I still need to see the market go up, maintain those highs, come back down, give a new setup, and then go up. All right. So I hope that makes sense, guys. So it's not like I'll be saying that the market will just bounce at the bottom here and go all the way back up. We still need to see a setup because the market can reset and decide to push back down. Okay. What's the time now? Now it's 8. I think we have done much, guys. I'll let those who are in other parts of the world to go and sleep. Let's meet during the week. I'll post setups for the week as the week goes, probably maybe starting from tomorrow. So let's go and sleep, rest, and then wait and see what the market has for us this coming week, okay? I'll post this video on YouTube as well for you guys to rewatch if you need to. All right.
Thank you, Coach. God
No
bless you.
worries. No worries, guys.